Mike Tedeschi, Wealth Management Advisor with Perspective Wealth Planning, and this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We'll check in with the dollar. We're also going to take a look at some commodities, and we're also going to take a look at breadth readings across the board because we are in the top percentile of all time, and we can take a look at what those numbers have meant. Other times in the past, we have had some similar readings. Hint, it's been pretty good for stocks long term. Let's jump into it here. S&P 500 finally broke out and made a new all-time high. I mean, we've talked about this. When we look at what we've got going on here, we have a series of higher lows and a series of higher highs. We are clearly in an uptrend. That break above that 4,000 level here over the last couple of sessions, clearly cementing that thesis in play. Now, when we take a look at the NASDAQ still has not made that new all-time high. We put that high back in February, and tech stocks have struggled a bit more here as of late. The bounce over the last couple of sessions has been really strong, but we still have that overhead resistance. The most important thing with this tech chart is we held on to this major support zone. That's going to be the line in the sand. We're above it. Things are looking good. Below that, things don't look so good. Right now, we're clearly up above that, and we are knocking on the door of all-time highs. Next up, let's take a look at the Dow Jones. Leadership this year. It broke out in the beginning of March, pushed up, and when we had that pullback in the market, it put in a back test of this breakout spot. Didn't come anywhere close to taking out any of these lows and rocketed up higher up to new all-time highs there as well. So very strong chart out of the Dow. Now, the weakling now is the Russell, and this I want to actually clear these lines off and give you a better look here of what I've heard a couple of people talking about as of late, the potential that this is a head and shoulders setup. Now, with a head and shoulders top, this pattern does not mean anything until the neckline is broken. Meaning for this pattern to mean anything, we would need to be under that 2100 level on the Russell. Right? As it is right now, we still have a series of higher lows, but we no longer have a series of higher highs if this is now a lower high. So we do not have a clear uptrend, a clean uptrend the way that we do in the S&P 500 or the Dow, but seeing a lot of this head and shoulders talk on social media over the last couple of sessions. And again, it really doesn't mean anything until we break below the neckline, i.e. make a lower low here underneath that 2100. So, right now it had an explosive move. To me, this is more reminiscent of a sideways action after a big, large expansion. All right, when you see this continue for a number more months before we get our next ultimate move. Okay, and because when we look at a pattern like this, we are coming from below, right? Then we have a higher potential that we are going to continue in the direction in which we came from, which is from lower to higher. So more than likely, we will see that resolve higher. But again, we always watch these charts, pay very close attention, and don't make any determinations until we actually get confirmation. So we are watching that all-time high there on the Russell, and we're watching that 2100. Now let's jump in and take a look at the U.S. dollar and some commodities here. The U.S. dollar pulled right up into that resistance zone and pulled back down. Now remember, when we're talking about a trend, we're talking, in this particular case, we're talking about lower highs and lower lows. That's a downtrend. That's still technically in play until we take this out, and that's what we were looking for up into this mid-93 zone on the U.S. dollar. Was this going to push through and actually negate this right here, or was it going to fail and roll back over? Well, for now, it has failed and rolled back over at this time, right? For this downtrend to continue, we're going to need to see it fall back below that 91. Right now, it really has not accomplished much of anything here since last August. We're basically at the same price we were back last August. So a little move up, a little move down, come right back in there. So we're really kind of trapped in between that 89 and that 95 level. The resolution of that will be very important, and we are going to pay very close attention to it. Let's jump in and take a look at precious metals. Gold held where it needed to once again, but But this continues to test this level. The more times something gets tested, the higher likelihood that we ultimately will break that level of support. When we look at this, we have a clear downtrend here over the last 6 months. But what I will do when I want to take a look at gold, I will look at the multi-year monthly chart. This is still a very strong long-term chart in the context of we had a big move up. Maybe we're just working sideways here and pulling back a little bit until the next ultimate move. But this is not exactly what the precious metal fans really would like to see. Silver, on the other hand, has held up better, right? We are still way off of those lows down at 22. The pullbacks have been right into that 24 zone, but we're kind of trapped in between these two levels as well. It's just held up a lot better than gold has. We're starting to see the industrial components to the precious metals do a lot better. Platinum continues to be extremely strong. We pulled back. We made a nice bounce, pushing back up there. And palladium is just a stone's throw away from that all-time high. We're back up over that 2,500 level. We broke out, and what did? We back tested that level exactly. It held, and now it's turned back up. I'd like to see this get up over that 2,800 finally. We'll continue to watch it. We take a look in at copper here. Copper is still basing nicely right up over that 390 major breakout zone. Again, we pull this chart back up and look at it in a larger context. We're almost near those all-time highs. We're going to continue to watch what goes on there. Oil has found a zone in which it is stalling out. We've talked about this. This is a very important level, this 65 zone. It failed. It's pulled back down, and now it's starting to make a potential and a base just over that 55 zone. The next resolution of this move is going to be important. I think if we break underneath that 55, we're probably headed back to 45. I think a little bit of sideways action here might make sense before trying to test and break above that 65 into that 70 zone. It's at a very, very important long-term level. This 65 is a big hurdle, and it may not get through it on that first attempt. It may not get through it on that second attempt. We're going to watch, and if it does get up over it, that, of course, would bode very well. Now, last but not least, we're going to take a look in at the emerging markets. The emerging markets have still held above that key 1275 zone in which it broke out. And again, some individual countries are acting much better than others. I definitely suggest you go take a deeper look at individual countries because there are certainly some clear winners and some clear losers in this space. And as always, we want to be focusing in on that leadership name. Our neighbors to the north, Ireland, go check out those charts. They look very, very good. We take a look at that NASDAQ McClellan Summation Index a lot. We talked about the importance of this level in last week's video. Really wanted to see it kind of hold this zone right here and turn back up, and look what we got. We got our crossover in the last couple of sessions and have turned back up. I'd like to see this breadth continue to head higher here, and that would be very good. Now, when we look across the board at many different sectors and how they are performing in correlation to one another, we see a very strong all-industry breadth breakout here, and it is up towards the top 1% of all readings. Let me show you what I mean. We are at the top 1.2% of all readings since 1990, and look at where a lot of these other readings have took place. They took place in this kind of zone here right before we continued a big kind of expansion. Another one right in here, again, another big expansion. Even going all the way back into the early 2000s right here, right off of that dot-com bubble, kind of bottom, we saw that kind of reading. And we also did see that reading right before the market ultimately rolled over. But if you look at it, breadth readings across all industries being this strong is usually a very good sign. That means it is a wide, total encompassing expansion. And that is usually very solid. When we go a year out on those readings, market's positive almost 90% of the time with a very positive risk to reward skewed structure. All right, the only time that when we get these kind of readings we've seen suffering is over the next week, and that can make some sense as everything kind of pushes out at one time. You get a lot of short-term profit taking, and then things continue, and that's what we have seen historically from this data set. Not only are industries acting really well, all the sectors are acting really well. And when we look at all the industries and sector breadth aggregate above 80% for the first time in 6 months, we get a number of readings there as well. They are preceding some pretty large expansions, and if we take a look 6 months and a year later, the last couple of times this has triggered since the 90s, we've been positive 100% of the time. Global indexes are acting extremely well here as well. They are at the top 2% of all readings since 1970. So we are seeing an expansion not just in the U.S., not across all industries and sectors in the U.S., but we're seeing it globally across the board. And if we look when we have all those global breadth readings showing the same way here, we are positive a very high percent of the time, 6 months and a year later, with a very positive risk to reward skewed setup. The takeaway from this video, we've got breakouts in the S&P 500, the Dow. The Russell chart maybe, is not as good as it was, but man, did it have quite a move earlier this year and at the end of last year. Taking a little breather makes a lot of sense, and the NASDAQ's almost a stone's throw away just from that all-time high as well. Globally, we're seeing expansion. Right now, charts are saying good things. Yes, as we have gone in these videos, there are some reasons why there's a little bit concern. It has to do with sentiment readings. Maybe things are a little bit too euphoric. But guys, when we see this much expansion across so many different sectors, industries, and globally, it typically has preceded some very good periods of the market. So we're going to continue to pay very close attention. We've got some very key levels laid out for us. If we do start to breach those, that might change our tune. But right now, things still look pretty good. If you have any questions, you want to reach out to me directly, you can reach me at mtedeschi@perspectiveofplaying.com or reach me at 814-580-9881. I look forward to talking to you guys. As always, have a great week. I'll see you next week. Take care.